Hello everyone and welcome to another special webinar with myself, Craig Erlam, Senior Market Analyst at OANDA in London. And as always, I'm joined by my colleague, my very esteemed colleague over in New York, my fellow Senior Market Analyst, Ed Moya. How you doing, Ed?
I'm doing great. Thanks for having me, Craig.
No worries. We really are knocking out these special webinars at the minute. It seems that despite it being the festive season, despite the fact that everyone wants to be going to the shops, going to bars, seeing their friends, enjoying time with their family, wasting time doing Secret Santa, we're instead sat in little tiny rooms talking about various political events which are consuming our minds, and particularly here in the UK, this very much sits up in that. We obviously had the election with the webinar special on Friday with regards to the jobs report, and again we don't want to spend too much time on that, but really was an absolutely knockout report. Really got the markets moving, and I mean I don't think I expect this to be any different. So this is the UK general election on Thursday. In my view, the biggest election in my lifetime, and probably comfortably so. The ramifications that this has for the UK for the years to come is really quite severe, and I think it may be more of a domestic issue, in that, are we going to see the Nasdaq rallying on the back of this? No, probably not. We are probably going to be focused more around the sterling currency pairs and the FTSE 100, FTSE 250, which is what we're going to talk about in this webinar. But broadly speaking, from within the UK and certainly in the centre of London, it's such a momentous occasion, and the coverage on the TV has been absolutely dominated by the election. I mean, I always talk about it as our little election because I imagine the coverage hasn't quite been the same elsewhere. Is there much coverage over in New York, Ed, or are you guys just talking about trade wars, etc., and while keeping one eye on what's going on over here?
It is a big story. I mean, when there's trade exhaustion, I think then we'll sometimes cover Brexit. But the overall take is that investors are excited about Brexit finally moving forward. I think UK equities have definitely underperformed all the major indices, and I know a lot of asset managers are finally interested now in possibly jumping into the FTSE 250 and seeing if this is finally the moment where we'll start to see the UK move forward with Brexit. And I think for currencies, you could see the volatility has perked up here, and I think you're probably going to see more coverage here on this side of the Atlantic.
Yeah, I mean, we know one person over that side of the Atlantic that's had a keen eye on the election and Brexit, and that's your president, Donald Trump. He's very much a fond follower of Brexit. He's very much supported Brexit in the lead up to the referendum, and he's very much talked up the prospects of a trade deal between the UK and the US once we break free of the EU. And he clearly wants the cleanest break possible. It seems that the cleanest break available is Boris Johnson's deal. But you talked about earlier the prospect of breaking away once this election's out, over and done with, and we can start to move on with Brexit. But that does ignore one possible outcome of the election, and of course there are many. And the option that ignores is the hung parliament without a majority for anything. Now, we may be used to the lack of a majority for anything here in the UK. We've had 3 years of parliamentarians arguing over what Brexit should look like and whether it should happen. And we've had an election in the meantime, and that didn't resolve it. So this is another attempt at trying to overcome that issue. And there is still a prospect that if we see a similar result to 2017, where at the time the DUP was the kingmaker and enabled Theresa May to effectively form a majority government in a supply relationship with them, that we are still unresolved because ultimately the DUP doesn't back Boris Johnson's deal. So if he can't lean on the DUP and the DUP won't back Corbyn, we're effectively in a situation where we've got a hung parliament again and we can't push forward with Brexit. We'll probably see another extension beyond the 31st of January. And we could be looking at another election, we could be looking at another referendum. So while there is hope that that can be avoided and that we can start to push forward, I think one thing I've learned over the last few years is not to get too optimistic about that type of outcome, because we've been disappointed so many times in the past. That being said, if we look at the polls, and again, really need to stress this, the polls have not been particularly reliable when it comes to referendums, elections. The polls had David Cameron not winning an election in 2015. That's what effectively led to this referendum in the first place. The polls had the UK strongly remaining within the EU. That clearly didn't materialise. The polls had Theresa May, barring one poll in particular, securing a comfortable majority government by more than 100 seats. That clearly didn't materialise in 2017. So it does beg the question, why do people still follow these polls? But they do still show the Conservative Party, and have consistently showed the Conservative Party with the numbers that will generate a majority in Parliament. And that includes actually that one poll that did indicate that they were going to fall short of that majority back in 2017. What I find really interesting, and again, I'd be really interested to hear your opinion on this, Ed. What I find really interesting is over the last week, we've seen a breakout in the currency, in the pound moving higher. It had been stable. It had been effectively trading sideways throughout the entire election campaign. And then that poll last week that I'm referring to, which showed the Conservatives extending their lead, it prompted a breakout in the pound higher. And in my piece earlier today, I referenced the kind of once bitten, twice shy aspect of this, the fact that traders have been bitten in 2015, 2016, 2017. Now it's 2019, and it seems they're not particularly shy. They're just ready to be bitten again. Do you think there's a danger that there is an overconfidence for the fourth consecutive vote here in the UK, and that maybe traders are getting ahead of themselves and setting themselves up for disappointment?
I think that's possible. And one of the areas of the market I've been focusing on is the options market. And I noticed that, everyone is, heavily pricing in Boris Johnson to win that majority. And you could see, I think that sterling's gains have somewhat been capped, and the options market's kind of implying that we're going to see little upside if we do have the favored outcome. And right now the overall concern is, what if we do have that big shock? And I think that is still a strong risk. And I think if Johnson had a better competitor, this would be even more exciting. But right now, at least on this side of the pond, we're firmly pricing in that he's going to come out with well over 40% of the vote here, and I think that this could be a repeat of what we saw in those other years where we had those big upsets. But I think markets are fairly confident that we're going to get this outcome, and they might be over optimistic on Brexit getting done by the end of January, but that'll be determined once we see the next steps by Johnson.
Yeah, it's interesting because a lot of what we're seeing playing out now is what we saw playing out in 2017, with two key differences. In terms of the similarities, Labour is promising a lot in terms of spending, and that does resonate with large numbers of the public, especially after a decade of austerity. And I think we've seen them double down on that. It seems that it's amazing to think that people at one point in 2015 were calling Ed Miliband kind of a socialist. And now he seems more like Tony Blair than he does like Jeremy Corbyn in terms of what he wanted to do at the time. And then in 2017 we saw a lot more spending promises from Labour, and that clearly resonated well. And now they've doubled down. They've really followed through with, we want to spend here, we'll borrow this, we'll tax them. This agenda is incredibly ambitious, and so we've really seen them double down. So, and that's, as you can see in this poll tracker, the red line has been moving up now since early November. It's quite clear that Jeremy Corbyn is a good campaigner. The problem that they have is that the blue line, which represents the Conservatives, has equally been trending higher. All of this has come at the expense, effectively, of the Brexit Party and the Liberal Democrats, who've fallen off a cliff over the last month or so, which means that we still have that position similar to 2017 again, where we could actually see both parties coming out with the highest votes or close to the highest votes they've ever had, while not securing a majority, with the other parties making up small numbers of the rest. And I'd say the key differences between, and obviously one of the mistakes I think that Theresa May really made in 2017 as well, and Boris Johnson is kind of making now, is when she hid from a lot of debates, and she tried not to make too many public opinions. I think she believed that if she made too many public appearances, then it might actually work against her rather than for her. Now Boris Johnson's been more public, but equally it's been publicised highly over here, the fact that he initially agreed to an interview with Andrew Neil, who's a very, very strong interviewer, and really pushes these candidates, and all of the other candidates appeared, and none of them really came off particularly well, if I'm honest, but they was heavily scrutinised. So Boris Johnson effectively pulled out late in the day, said that he couldn't fit it into his schedule anymore. So the kind of cowardly aspect of that is very similar to 2017 Theresa May. And there's been a couple of other examples of that as well, which could potentially work against Boris Johnson come polling day. The two key differences for me between now and 2017, though, and you hate to use this as an example, and maybe three key differences actually, and it's hard to, you don't want to use this necessarily as an example, but Boris Johnson is far more charismatic than Theresa May. And I think we can sometimes underplay just how important that is. Policies are important, and what you say in public is important. But I think when you have that extra bit of charisma, people find it a bit easier to get behind you and forgive any flaws. And there's clearly flaws within both of these characters. A second key difference for me, and this is probably the biggest key difference, is the fact that Boris has a deal on Brexit. He has a deal which can be voted through by January 31st. Theresa May didn't have that luxury. The people were voting for Theresa May effectively on the prospects of being able to get a deal done if she could get a greater majority. And I think the third biggest difference between now and 2017 is the way the Conservatives have utilised social media to their benefit. And again, it was quite clear in 2017, Labour did a fantastic job of utilising social media to generate additional support, and the Conservatives were pretty poor on that front. And there's been all these reports about people they've hired since then. I think there's a couple of Aussie guys who have been helping their campaign out. And you can look at a lot of the things they do, including a video. I'm not sure if you've seen it, Ed. If you haven't, I'll have to send it later and check out my social media, and I'll post a lot later on, that Boris Johnson put out earlier today. That famous, have you seen Love Actually, Ed?
Yes.
That famous scene at the doorstep where he's holding all the signs, to me you are perfect, blah, blah, blah. And they've recorded a video and put out on social media today, and it's Boris Johnson stood at someone's doorstep doing that kind of scene, but with Brexit and the Conservative Party, and we need a majority, and we need you, and all of this, that, and the other. And it's horribly cringe. But can you imagine how many retweets it's had, how many mentions, how many television programs are going to be discussing that, how much that puts the message out. They've really stepped up the game. They've put loads of stuff out, most of which makes people cringe, as I say. But the exposure it's generated is absolutely phenomenal. And I think that's going to make a massive difference. Like I say, if you haven't seen it, keep an eye on my Twitter account. I'll post it out shortly. There was the part of me that hated myself for enjoying it, if I'm perfectly honest. You can see it's clearly working, these strategies. Now, I'm not going to sit here and make a prediction on the election. I think in many ways it's a bit of a mug's game to make a prediction on this election, because it's just so unpredictable. And I think the Brexit addition really does just complicate matters massively. But like I say, all that matters is what traders do, and traders are buying this idea that the Conservatives are heading for a majority government. And if they do, then the difference again between now and 2017 is the fact that that Boris Johnson has filled the Conservative candidates with people who back his deal. So therefore he will have the numbers, whereas Theresa May had various viewpoints across the spectrum from Remainers to Leavers, which made her job pretty much untenable. And so I think that's going to be a really key thing. Of course, the alternative there, and I will stop talking in a second, I promise. I will come back to you, Ed. The flip side of that there is there's a lot of parties on the other side who have refused to go into coalition with each other, but that doesn't mean we couldn't see similar confidence and supply arrangements that the Conservatives had with the DUP previously, who they could work together to form a majority government of such. And that's what people are really looking out for in the event of a hung parliament as well. So with all that said, I guess my question for you, Ed, is I guess what is it that you've seen that's really what is it that you've seen that makes you think that have you seen anything that suggests to you that maybe the Conservatives could fall short of that majority or extend the majority? Obviously, we tend to pay a lot more attention to data and figures, but of what you've seen over there, are there any other key differences, I guess, between now and 2017 that you think I've just missed, or that people are missing, that could prove to be pivotal?
No, I think you covered everything nicely, and I think that the market, and at least on this side of the pond, we want to see Brexit done. I can't imagine the frustration that is going on in the UK, whether Brexit happens or it's not. If we have another referendum, I think that the one thing markets want is certainty, and right now, for the longest time, it felt like this was going to be going on for many, many years. And now there's growing optimism that by the end of January, Boris Johnson could be in a position where he can finally deliver Brexit. Then, it's still messy after that, but there's high optimism that this is going to get done. I think on average, over the last 5 polls, it's still around a 10 percentage point lead. As recent as I think polling has, they've at least in the Americas, they've done a much better job following the Trump shocker and the last presidential election. I think you're going to see markets be stunned, and it is I think growing optimism that if Johnson does get that majority, that we'll finally see Brexit push through, and that would be a major headwind.
Yeah, I mean, I think people are really in for a shock on February 1st, even if the Conservatives get a majority government, when they realise that Brexit's not going to disappear from the headlines, unfortunately, because then becomes 11 intense months of negotiating a free trade deal with the EU that stops us leaving on WTO terms, which is effectively like a no-deal Brexit at the end of December next year, which is the next deadline they've set themselves. So I think we're in for a rude awakening, to be quite honest. Brexit isn't over yet. I remember saying on the 23rd of June, 2016, because it looked so obvious that Remain was going to happen, that I can't wait to never use the word Brexit again. And little did I know, it was going to be my most used word for the next 3.5 years. So I think that's a good time to move on to the charts, unless you've got anything to add.
No, let's crack on.
Cool. So I mean, I've brought up a few sterling charts. If anyone has any other sterling charts which we don't cover, then please do send them through, and we'll happily take a look. I mean, the obvious one to start with is pound versus the US dollar, and this is the breakout which I was referencing earlier in the webinar. We were between 128 and 130 for so long, and it was when these polls started to come out, especially I think it was the YouGov poll, that we broke through this 130, and naturally we saw this big upswing from 130 through to above 131. And I think, I'm not sure if you agree, Ed, what typically happens when you see such a key resistance level, especially around such a key figure, you've probably got a lot of stop losses just above here. So when you do finally push through, the move can be strongly exacerbated to the upside just by stop losses being triggered and pushing prices higher. And we have stabilized around the kind of 132 since then. Again, I mean, this isn't a massive breakout. So this isn't like 2016, which we can go back to, where we were trading more around the kind of 150s, which rallied from even 140 through to 150 in the weeks leading up to the referendum before we finally broke lower back to below 130 in the aftermath. So it's not to that kind of extreme. So maybe some lessons are being learned. But it did interest me that after such a consolidation, we did break higher. Now, as far as I'm concerned, looking at the charts, there's a few key levels to keep an eye on still. There's 130 to the downside. And these are broad margins still to an extent. But, I mean, I think over the next 3 days, we could be talking about broad margins when you're talking about the size of the moves which you could potentially see in the pound. Ed correctly alluded earlier that if we are seeing the pound rally into this, then there may be limited upside in the pound because so much of it's priced in. As I say, I'm not sure we've I think in certain situations you may have seen more priced in, but I think because of what's happened previously and because of the unpredictability of this election, I still think there could potentially be more upside to be priced in on the if the Conservatives did secure a comfortable majority. But 133 is the next obvious level, given that it's been resistant since June 2018 on countless occasions. Well, not countless, you count them if I could be bothered, but on numerous occasions. And then 136 above here is historically quite a big area of previous support and resistance. The fact that we seem to move in these kind of 3 cent clips seems quite interesting to me as well. They kind of got 127, 130, 133, and 136. I mean, I'm not going to ask you where you think the currency is moving, because obviously that's not what we do here. But I mean, I guess, roughly speaking, you don't think there's too much more upside necessarily to be had by the Conservatives getting the majority? But what if we do see the flip side of that? What if there's a massive shock the other way and the Conservatives fall way short of the majority, and we get the flip side of that? And now this, I want to, before I ask you this is not a political webinar, and this is not in no way highlighting mine or Ed's personal views of the political parties. But I think it's become quite clear from the market's perspective so far that a Conservative majority is the preferential outcome. It offers certainty, it offers an end to the phase one of Brexit, and the flip side of that, because of things like nationalisation efforts and because of massive spending plans from the Labour Party, which, as I've said, have proved very popular, that Jeremy Corbyn going into number 10 under whatever arrangement is seen as the less preferential outcome. So with that in mind, you say there's limited upside. Do you see a kind of some of the more extreme calls where the people are saying 10% decline, for example, in the pound in the event of Corbyn going into number 10? Do you think they're a bit overblown, or do you think they're potentially justified?
The market is very fearful of Corbyn taking, the realm and becoming prime minister. I think if we get a hung parliament, I think we'll see the British pound possibly fall toward the mid-20s. There's I think a little chance that we'll see Prime Minister Corbyn, but you can never you can never know until we see the results. But the overall view, the longer term view for the pound, though, I think it seems they're getting closer. And even if we do have if we have a hung parliament, I think you're still going to see possibly early next year the U.S. dollar be at a key turning point where we might see a major reversal there. So any sterling declines might be mitigated there, but for the purpose of just the election reaction, I think you might see some weakness, but you still might see some longer term investors start buying on that weakness and feeling a little bit more confident if the election results play out as many are expecting.
Yeah, I mean, I think one of the things that is typically overplayed with the Corbyn fear factor can be the fact that, while you say it's unlikely he'll get into number 10, it's extremely unlikely that he'd somehow pull off a miraculous majority victory and not have to rely on the support of other parties. And what we have to remember is the reliance on the support of other parties typically means that you're going to have to negotiate what policies that you'll prioritise and which ones you'll drop. So there is scope for some of the more fearful policies as far as markets are concerned not necessarily being followed through under the next parliament, because they're the ones that maybe they'd have to negotiate out with the Lib Dems, with the SNP and others. So you may see that initial knee-jerk reaction, but the longer-term susceptibility to it may not be as extreme as people fear once those negotiations do get underway. I think the other thing I always point out, and I know this is slightly different because of the nationalisation aspect, and that does scare investors more so than anything else. And I think BT at one point thought they were not going to fall under that umbrella, but that quickly changed recently when the Labour Party announced that they would effectively nationalise BT Openreach and using government bonds at a level that they deem to be a fair value. And I think that's the thing that really scares investors as well. It's not about market values, it's what they believe to be a fair value. So that's the thing that kind of scares people. I think the flip side of that as well is the spending pledges, which people sometimes allude to when they talk about weakness. You'll remember as well as I do that prior to Trump's election victory, people were talking about a Trump victory as being the negative outcome for the markets because of what he wanted to achieve, because he was such a controversial character, because he was so divisive. And people were, the knee-jerk reaction to them in the markets when it became clear that Trump was victorious was actually the Dow and the S&P spiked lower. And it was shortly after that, a few hours later, that we then started to see that incredible rally take fold. So these things don't always pan out as media commentators will necessarily say they will. The knee-jerk reaction may fall in line, but once people start to realize what other things accompany a victory, then they may start to think twice. They may start to still less favor companies that they think could be a target of a nationalization strategy, which is where BT, Virgin, etc. start to look a little bit vulnerable. But any other companies, retail outlets, and things like that, they may still do well, because ultimately when a government's spending money, it tends to be supportive for the economy, at least in the shorter term, and that drives economic activity, it drives consumer spending, etc. And it'll be interesting to see how the markets would weigh up those two very conflicting sides to this. What's your thoughts on that, Ed?
Well, I think, and on this side, we're very concerned that if Labor does win, and if they do consider nationalizing the railroads, utilities, and telecoms, that is just going to be very, very scary for global equities. The calls for concern, we're over here, like if let's say we see a progressive Democratic nominee, you'll start to see some of that risk being priced in U.S. equities, as the fear of major changes in regulation, and I think you're probably you're probably right in that it's not going to be the end of the world if Labor does take the helm, but there's so much potential upside here, I think, for UK equities if we do get that conservative outcome that everyone is targeting. From the experts that I followed, I don't really see anyone calling for this shocker of a surprise, and that's where markets can get dangerous, because they're heavily positioned in one way. But I think right now we're looking at possibly here a good moment where we could see the British pound, people bought the rumor and they might sell the news, but then you might see some longer term upside once all the noise is settled.
Yeah, and I guess the other flip side of that, which I touch on as well, leading to two of the points that you made. One is you've got the Remain dividend as well, that would come with a Labour kind of coalition government, in that if they're going to have a second referendum and they're going to renegotiate their own deal, then you would assume that any deal that they negotiate is going to be far more closer to the arrangement we currently have with the EU. And then when put to a second referendum, there's the likelihood that we actually then vote to remain on a second referendum. You'd think that would come with a dividend as far as the currency action is concerned as well, that the Conservatives can't offer. But as you say, the Conservatives are more business friendly, broadly seen as the more business friendly party. So as far as UK equities are concerned, especially the more domestically focused equities, which is where we typically talk about the FTSE 250, you would think that would be, broadly speaking, the more preferential outcome, and obviously the least risk as far as things like nationalisation is concerned. And as you alluded to earlier, again, I do think the FTSE has underperformed. We've got the UK 100 here, the FTSE 100 index, and one downside risk from the FTSE, because again, going back to 2016, we did get that knee-jerk reaction on the day that the referendum happened, and then it was like this memory kicked in, this memory of, well, hold on, let's just check to see how many companies in the FTSE 100 actually do transact in the UK. Let's see how much of their business is actually drawn from the UK, because any business that's generated abroad, when you've got a currency that's fallen 10%, should suddenly those revenues look much better when it comes to reporting season. If you're generating your revenues in US dollar and then you've got to convert it back to GBP, that's much more preferential exchange rates when it comes to reporting. And it turned out, I think at the time, it was like 85% of revenues generated by FTSE 100 companies came from abroad, which is why we saw the FTSE starting to rally alongside global equities and actually outperforming because of that currency weakness. So while in the while a positive Brexit outcome, or even from a purely market perspective, a conservative outcome, may be good for domestic stocks and even the more global focused stocks. From a FTSE 100 perspective, it would potentially come with the headwind as well of a stronger currency on the back of that, actually dragging it lower in the inverse, in the opposite way that we saw back in 2016.
No, well said. And the UK equities have underperformed all the major world indices. So since Brexit, so when we take a look how the FTSE 100 has performed, it's been pretty much unchanged since the referendum. But when we take a look at the S&P 500, it's up almost 50%. Even the emerging market index is up mid-20s, and even the stocks Europe 600 index is up around 15% since then. So there could be some catching up here, and I think eventually you'll see portfolio managers want to have more exposure to the FTSE, because it is, you can see that right now all the money is parked elsewhere.
Yeah, it's a great point. That's a really, really great point. All you have to do is look at this to see that we really have lacked momentum for quite some time now. 7,000 to the downside has capped any sell-offs for the majority of this year, but we're not breaking 7,500 really. We've had a couple of occasions, but broadly speaking, that's the range we've been trading within for almost the entire of this year, and it does seem that Brexit is really, really holding things back at this stage. So we'll touch on a couple more charts and then we'll wrap things up. We don't want to overstay our welcome, as it were. I think the most extreme place that we've seen the pound's moves has come against the euro, and now it's fair to say that this isn't all Brexit related. The euro, of course, has had a bit of a torrid time on its own. Germany entering recession, Italy entering recession, and numerous other, and obviously a massive stimulus package, of course, from the ECB, all weighing on the currency. But we were below 91 for quite some time, and we finally broke above there. And I think it got people really excited. But then we failed to break above these August 2017 highs, and since then it's all been downhill. And again, you can see you can see some points here. For example, I think this is where the polls started to where the polls started to change, and we started to gather this real downside momentum for the currency pair, upward momentum, of course, for the pound. But now we're trading back in levels that we haven't seen since 2017, and we're not too far from 83. Now, that may not seem like a big deal, but this 83 is a level that was only breached in the aftermath of the referendum. So if we can get through 83, we're effectively back in pre-referendum territory, or referendum night territory. That's, for me, is a huge achievement under the circumstances. But it also suggests that there could be a significant barrier to the downside.
83 is the key level for me too. That's where I have my alerts set, so I'll get woken up if 83 is triggered. I don't have alerts for many levels. That's one of them.
I won't be woken up. I'll be sitting here staring at the screen, unfortunately, while the rest of the office is out celebrating their work Christmas night out. I always keep saying it was extremely insensitive of Boris Johnson and all his colleagues to call an election night on the busiest Christmas party day of the December calendar. I believe the 12th is when more companies across London are having their parties, or even across the country having their parties, than any other day, because it's like that middle Thursday between start of the month and Christmas. So unfortunately, our party day was picked before Boris Johnson selfishly chose that day. So while everyone else is partying up, I will be sat in this office monitoring the outcome, watching those exit polls at 10 p.m. UK time, 5 p.m. obviously if you're in New York, and so on and so forth. And I think I'll be very much keeping a very close eye on that 83 level to the downside. Should we wrap things up with sterling yen, and then if anyone else has any other charts that they want us to look at, then we can. But we'll wrap things up here with sterling yen. And I mean, it's kind of this has really gathered momentum. Like, it's amazing how much just the light at the end of the tunnel can do for a currency. The fact that we're not there yet, we haven't had we haven't left the EU, we haven't entered the transition period, we haven't had the election, but just seeing the light at the end of the tunnel really has propelled the pound to the upside. and we had this consolidation like against the dollar, but again we've broken higher, with 144 in my eyes being a really interesting level. You can see numerous occasions going back where this has proven to be a big support resistance level. Again, above here, this kind of 149, 150 level starts to look really interesting if we do get if the markets do get that desired outcome on election night. But this is really bullish, and this is really, I love the way some of these Ichimoku charts can play out technically. The fact that we can have the price action breaking through the cloud, and then it comes back to test the cloud down here, rotates higher, a nice little bullish setup here, then the lagging line follows straight through. This is looking extremely bullish right now, and if the markets get their favorable outcome, it could really, things should really start to look up for the sterling yen pair.
And if you turn the chart to the monthly or weekly, you could see that we're approaching major downward sloping resistance. Just go starting with like the April, the 2018 high.
2018 high. Sorry, 2018. Forget I was on the weekly chart. So I take it this is what you're talking about. Yep. So
yeah,
that is indeed. Yeah, and that crosses that 144 level as well, which is one we were just highlighting, just adding to the significance there. Yeah, that's yeah, things could get really interesting for these sterling pairs. I think we've been spoiled for volatility on sterling for quite some time, but I feel like we're not quite yet at the end of the tunnel. We can see the light, or maybe there's one more twist and turn to come. I'm sure election night is going to prove to be extremely eventful. Again, just to remind people, exit polls at 10 p.m. UK time. Keep a very close eye on that. They have, if I'm not mistaken, been really accurate in the past. It was the exit poll at 10 p.m. in 2017 that showed Theresa May losing the majority, and it played out exactly that way. So I think there's going to be, we could see a strong price reaction at 10 p.m. this Thursday once those exit polls are released. Have you got anything else to add, Ed, before we wrap things up?
No, I think we covered a lot, and I think you just got to stay tuned. This is going to be a wild one.
Yeah, and there's going to be plenty more talk about this over the next couple of days. We'll put out lots of content. Keep an eye on my Twitter, actually, and I'll post out that Boris video so that everyone can collectively cringe. You can follow myself on Twitter. It's Craig_Forex. And then Ed Moya is EDJ Moya, if I'm not mistaken, Ed.
Exactly.
Perfect. And yeah, apart from that, keep an eye on all the content we're posting out over the next few days. There'll be plenty of election commentary. If you yourself feel like staying up all night and keeping me company, then do tweet me. And I will happily converse. I'm sure there's going to be plenty going on, but it should be good fun as fun as politics can be. And apart from that, stay safe. I wish you all the very best of luck with your trading as ever. Check out MarketPulse, and I'll catch you all again very soon. Thank you very much.